Hey there traders, welcome back for episode number 126 from the StockBandit.tv. Hope you've had a great weekend and you're getting ready for a brand new week of trading. So let's take a look at the indices here. That's where every trading week should begin, with a good look at the market, understanding some key levels and knowing that that's going to influence how most individual stocks will behave. So we're going to start off taking a look at the NASDAQ, then we'll move to the S&P 500 and the Dow. And so for the NASDAQ, this index did pull back on Friday. It was option expiration Friday, and that's usually kind of a famed day for some volatility, although it usually doesn't really turn it into that. It really is more just kind of expectation for that, and oftentimes we end up seeing some pretty narrow range option days, option expiration days. But on Friday we actually did see some volatility. A lot of that was news driven in the financial sector, which I'll touch on briefly here in a minute. But really this was the biggest down move that we've seen for the market, really going back to this move back here in early February, back on February 4th. So it's been a long time, this index and this overall market, in each of the indices, just kind of, chipping away at some gains day by day, and just lots of steady upside that we've seen. So a little bit of volatility is a good thing. So that's probably going to help shake up the charts and really do some wonders for many individual stocks to see, some recent upside and then a little bit of a give back move. And so it's going to be interesting to see this week if this does lead to any downside follow through. For the NASDAQ, of course, it's still hovering above this uptrend line. Currently that's sitting about the 2456 area. By the way, if you're not watching this in full screen mode, go there now. You will see a much clearer picture. Interesting really to see Friday's low for the NASDAQ at 2467, which perfectly filled this gap from Wednesday morning of last week. So show that to your friends who don't think that technical analysis means anything. So last week we were seeing some separation here between price and this uptrend line, and generally that's been where we've seen some of the best moves take place in this index and throughout this run off the February lows. However, we're now pulling back here, so it's going to be interesting to see if this line gets defended. But keep in mind, even if we do see a break of this trend line, it does not mean that this trend is done. It simply means that the pace of this trend is done. Remember, an uptrend line marks the pace of an uptrend. The trend itself is marked by higher highs and higher lows. We need to see lower highs and lower lows for that trend to truly change. And we're not going to see that take place certainly in one day. It's going to take weeks for that to take place. So it's a good time to exercise some caution, but there's no need at this point to start dumping everything. And keep in mind, the buyers have had tremendous success from this run off the February low. That's 2.5 months of very good recent success that they've had. Then going back all the way to March of last year, every single dip that we've seen, even short-term dips since March of last year, have been bought. So if you've been buying dips along the way, you've been paid over and over and over. And so every chance you've had to do that, it's reinforcing in those dip buyers' mind that works. And so I would not expect the bulls to just turn up dead and just walk away and see this market just crater from here. That would be a big surprise to me. And I think we've got to weigh the psychology. The prevailing mindset out there is this is still a buy the dip market. I'm not saying to do that at this point, but I am saying that many will, and that's likely to at least bring about some kind of a battle if and when a turning point really does come along. For the S&P 500, we did see this index break this rising trend line about the 1195 level. That did take place on Friday. A lot of this was due to news in Goldman Sachs, which is a major investment firm, and they were hit with a fraud charge midday by the SEC. And given the financial exposure in the S&P 500, it's no surprise this index gave up more ground once that news was out. It was already underwater on the day, but now that really kind of sealed the fate for the day. We did obviously see big volume along with that, but that's largely tied to option expiration as well. So here again, biggest down day since February 4th, but the fact that we've now fallen out of this channel, that was bound to happen at some point. Even if price just were to move sideways and base, an uptrend channel will be eventually broken even with lateral price movement. So keep that in mind. For this index, we have had a lot of congestion here in recent weeks that may serve as support even if we do see some follow through in the next few days. So be watching really about this 1175 area, and then below that would be 1150. That's the former high back there from January of this year. And then for the Dow, this index did briefly undercut the 11,000 level on Friday, but again, that's more psychological than anything. Also psychological, the fact that it closed back above it. So take note of that. This index really in recent weeks has shown support at about the 10,825 level. So if we do see some continued downside, that's really the next spot that I would expect to see get defended from the buyer. So really, it's going to be an interesting next couple of weeks. Don't count on this market to just roll over and play dead. Expect some battles. Remember that this market has been paying people who've been buying dips, and so don't be in a big hurry to just go out and start short selling everything and start declaring a top, because we don't know yet that it's been put in. Thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.